Welcome back to Explain the Charts, everyone. It's July 18th, 2025, and today we're putting Amazon, ticker Amazon, under the microscope, examining both the latest news and its chart data. Amazon currently stands as the world's fourth most valuable company, boasting a staggering market capitalization of nearly 2.4 trillion US dollars as of yesterday. News headlines highlight a remarkable price increase of nearly 30% last quarter, attributed to strong collaborations and technological advancements. Looking at the daily chart, we can clearly see this impressive rally, stretching from its lows in April 2025 up to its current levels. This strong upward momentum is a key factor supporting a bullish short-term outlook for Amazon. However, there's another major story unfolding. Jeff Bezos, Amazon's founder, has been consistently selling off significant portions of his Amazon shares. He sold approximately $737 million US dollars worth of shares recently, part of a prearranged plan to fund his space exploration company, Blue Origin. While one analyst suggested these sales would have no meaningful impact on Amazon, our daily chart here tells a slightly different story. If we narrow our view to the period between February and April 2025, we observe sharp declines from the 52-week high of 242.52. Specifically, a significant drop occurred around February, followed by another substantial dip into April, hitting a low around the 160s. These periods coincide with Bezos's announced selling plans, suggesting that while the sales might not signal a negative outlook for the company's fundamentals, they certainly contributed to short-term supply pressure and price corrections in the past. Shifting our focus to Amazon's recovery from that April low, the chart demonstrates a strong V-shaped rebound. The price has climbed steadily from the $160 range, retesting and breaking through previous resistance levels. The psychological $200 mark, which acted as significant resistance in the past, now appears to be solid support. This resilience, even amid news of layoffs in Amazon Web Services or AWS, suggests underlying strength and investor confidence in Amazon's core businesses and AI ventures. The company's energy-intensive operations and massive power consumption for AI are also factors drawing investor attention. The current price action on the daily chart shows Amazon is trading around the $223 to $224 range, slightly lower than today's live trading levels reported by news sources, which are around $225 to $226. Let's zoom into the one-hour chart to examine the more recent price action from late June to early July. Here, we see that Amazon has mostly been trading within a relatively stable channel, showing less dramatic swings. The $219 level has proven to be a reliable short-term support during this period, with the price bouncing off it multiple times. On the upside, the $224 level has acted as immediate resistance, capping upward movements. This consolidation suggests that after the strong rally seen on the daily chart, Amazon is currently in a phase of sideways trading, which could be either accumulation before another leg up or distribution before a pullback. Volume on these hourly candles, while substantial, indicates typical trading activity rather than extreme buying or selling pressure, which is something we always want to look for. Now, let's get even more granular and look at the 15-minute chart, covering the past few days' intraday movements up to yesterday's close. We can see very tight ranges and relatively lower volumes during extended trading hours. The price has been oscillating primarily between $225 and $227, indicating very short-term consolidation and low volatility. This tight range could precede a breakout in either direction, so vigilance is crucial. Current news indicates a nationwide boycott against Amazon started in July, but its effect on share price remains to be seen. From this chart, there's no immediate negative impact evident, suggesting the market is either shrugging it off or its effects haven't materialized yet. To summarize our analysis for Amazon, the overall long-term trend remains bullish, driven by strong growth in key areas like cloud computing and e-commerce. Key support levels to watch are $220, then $200, and for a more significant long-term dip, the $170 area. On the resistance side, the immediate hurdle is around $227, with the ultimate target being the previous 52-week high of $242.52. A sustained break above $227 with strong volume would reinforce a bullish short-term prediction, potentially leading to a retest of all-time highs. Conversely, a break below $220 could signal a short-term bearish reversal, with the likelihood of testing the $200 support, perhaps 60% likely if market-wide tech correction occurs. Keep an eye on upcoming earnings reports and further news regarding AWS, as these will be major catalysts. That's all for today on Amazon. Remember to like and subscribe to Explain the Charts for more in-depth analyses. Until next time, happy trading!